trust as a commodity in finance is in short supply, right? Because people feel sold the whole time. I'm definitely worried about, a situation where interest rates start to really, spiral out of control, and people talk about bond vigilantes. When I left the army and I landed at JPMorgan Private Bank, I realized that I kind of hit the jackpot.
Well, welcome to the Family Office podcast, the AE Family Office podcast, the first episode. We've been doing versions of this over the years, but we've not really focused in on family offices yet, have we, Luce? I'm joined by my colleague and collaborator, Lucy Sermon here. How's it going, Luce?
Doing great. Happy to be here and excited to film our first ever AU Family Office podcast session.
Yeah, to kick off to a big year, we've got quite a bit coming this year, haven't we? Lots of interesting people. Currently working on our Miami Family Office Summit in a couple of weeks' time.
Yes.
Plus the yacht, the AU yacht, the 2 days after that. Lots of people going out to Miami for Hedge Fund Week. Now being called Alts Week. We're not quite sure what we're going to call it, but exciting stuff, huh?
Very exciting. There's over like 5,000, even more, 6,000 people.
Is it that many?
It's that many
this
people.
This thing gets bigger every year.
It gets bigger every year, loads of events, lots of stuff going on, but we're super excited to meet with our members.
I've lost track of the events, and some really, really good events across the board. From the massive conferences down to dinners, it's almost impossible to stay on top of it. So yeah, another big week. Steel yourself for that. We had a really great chat, didn't we?
Yeah, Will was great. It's great to have someone who's super passionate about what they do, especially in this, the family office space, understanding more about the multi-family office structure and how they can add value.
The eloquence there was nuts. I mean, I was kind of, I don't want to gush too much, but yeah, he was pretty cool.
Super smart guy.
I think everyone's going to enjoy this one. Really good place to kick off. It's a new family office, relatively new family office, multi-family office that's developed over the past few years, and that they seem to be flying. Really, really smart group of guys. Fascinating client base, and I think the sky's the limit for them.
Definitely. I think as well the fact that they're so focused on trust, integrity, all of those things that are very aligned with us. All the things we like. It just felt like we were kindred spirits in that sense.
Definitely. Well, I think you guys are going to enjoy this one. Here's Will Davies of Ptarmigan Capital. Will, welcome. How's it going? Good start to the year. Happy New Year.
Thank you very much indeed. Gus, Lucy, lovely to see you both.
Lovely to see you as well.
Thank you very much for having me along.
Yeah, it's good to have you here. We're kicking off a new series of Family Office podcasts, and you're one of our very first guests, so really, really great to have.
No pressure.
No pressure whatsoever at all. To have not only an AU member, but a London Family Office on the cast as well. So yeah, thanks for joining us. How's 25 kicked off for you?
Yeah, good. I still, probably like everybody, I'm still signing emails off 2024. But we're very excited about this year. We're 18 months into our life cycle, as it were. Ptarmigan having sort of come into existence June 2023, so still early in the piece. Last year was very encouraging, and looking ahead to this year, there's plenty of demand for what Ptarmigan are doing. Maybe we'll get into that. And I sit down kind of weekly, with my partners, and we sort of kick the year off on Monday, looking ahead. And I think there's myriad reasons to feel very positive about the family office space in general, but also what we're doing for clients, and obviously from our perspective, just the growth of the business itself.
Fantastic.
I've got a question. So Ptarmigan.
Yeah.
So let's put it back for people who are listening in. It's a multi-family office.
Yes.
Can you tell us a bit about what the firm does, the wealth management services that it offers, and also what is a family office? Yeah,
I think those are really good questions, Lucy. It's a funny term, isn't it, an MFO? And when I'm talking to people about it who inherently understand the kind of financial landscape, what an MFO is and does. But if I'm speaking to somebody that is coming to it for the first time, I actually position Ptarmigan as an investment-led boutique. Okay, we are independent, we are small, we are not governed by large external or institutional shareholders, and predominantly what we do for our clients, and when I talk about our clients, those are private clients, generally individuals, who are coming to us for investment management services. Now, where we sort of fit the bill around the multifamily office piece is, the two kind of other arrows in our quiver, so to speak, are the reporting, so consolidated reporting and extended reporting capability, allowing clients to consolidate their assets into one report, regardless of custodian or where they're held or type of asset. And then, which is where, AYU have been so kind of beneficial to Ptarmigan in its early life cycle, and, we're full of admiration for what you guys are doing. It's the network effect. It's, you're thinking about how, let me take a step back. Every single conversation with potential clients, prospects, even new clients to the firm, starts with what matters to you, Lucy? What can we do for you, Gus? And I find that, that ability to sort of look at things in the round. Yes, we're investment led, but it starts with where can we effectively put our network at your disposal? So investment, network, reporting, those are the three elements that sort of Ptarmigan are founded upon, but leading on the investment piece, simply because, the demand for boutique investment in our eyes, and I think that's being borne out by the way the market is going, is only going to grow. And, we've seen that over the last couple of years.
And how did you get there? What's the kind of the backstory to the company, and I guess also the founders as well?
Yeah, so there's three founders, myself, Charles Jones, Douglas Barnett. All of us had spent, the thick end of 10, 11, 12 years at large organizations. I started my career out of the army at JPMorgan and then moved on to Credit Suisse. Both superb organizations. Obviously, Credit Suisse has gone through some change since I left. And Doug and Charlie predominantly at Waverton, which is a well-known UK wealth management business. The premise really was I was given the opportunity to start the London office of a Swiss MFO, HBS SA, with whom we still have close ties, and they're a shareholder in Ptarmigan. There was a corporate transformation, if I can put it that way, in June 2023, which saw Charlie, Doug and I take over the business, rename it as Ptarmigan Capital. And all of us shared it wasn't so much a frustration as an aspiration that private client investment management could be done better or can be done better differently. Clearly, beauty is in the eye of the beholder, but it can be done without the multi-layered kind of bureaucracy, perhaps, of larger organizations. We felt that, the sort of, and we keep coming back to this trifecta of service, flexibility and alignment. And we felt that we needed to build our own edifice, construct of a private client multifamily office in order to really fulfill what it is or what it was that our clients were asking for do for them. And I think, that is, we're nowhere near, I would never be so arrogant to say we have, we are there, we are it, we are successful, but we are growing nicely in the context of an early stage firm. And I think, looking at the UK landscape, there has been sort of so much kind of consolidation that actually, and when I say consolidation, organizations amalgamating because there's private equity involvement or it's, ostensibly good for the shareholders, where in our opinion, small really can be better. You can present or provide institutional level investment management and portfolio management when done in conjunction with the network effect that an independent allows you to leverage on behalf of your clients. That's powerful. And the last thing I'd say around that is, we are building this for 10, 15, 20 years. We have no external shareholders to speak of other than our clients outside of our employees. And we want to be doing this for the long term. And, Lucy, we were talking off air a little bit about, my military career. I make no bones about, that whole kind of service ethos and mentality. Yeah. And I make, no apology for repeating it. Starting every conversation, what can we do for you, and then take it forward. It means you avoid all of the salesisms, you avoid the productization that so many financial institutions by requirement are now sort of going down. And I think people like that. People like that simplicity, and they like that kind of can-do attitude.
So who do you look after now? Can you tell us about your clients a bit more about?
Yeah, absolutely, Lucy. So we've just passed the 100 million in assets under management mark. We have 12 clients, and aspirationally, we'll look to sort of double and a half that, so 250 by the end of this year, which I think is doable. One of the things which I think slightly differentiates ourselves is we very much limit the number of clients per, call it relationship manager if you want. Our aim is for 10 or 15 maximum, because that that maintains the integrity of the service proposition, and you're not becoming a number or a cog in the machine. Our clients probably fall into three brackets: entrepreneurs, which and I think Ptarmigan as an entity appeals to people who have built their own wealth via taking risk, because that's exactly what we are, taking risk on behalf of our clients. Financial professionals, and then families, sort of multi-generational families who, again, like the idea of growing with an organization which, yes, it might be early in its life cycle, but the kind of the grizzled sweats behind the levers have done this for, as I say, not an insignificant period of time, and are able to, as I say, bring to bear institutional capability, but without the large kind of bells and whistles that a large organization kind of comes with. Most of our clients are UK based, but we will look at, and we do cover, clients internationally where, we have a couple of Singaporean residents, and we look after their trusts. So UK centric, but not solely.
So within that, your slice of the market is individual or family high net worths.
Yeah.
Who it sounds like are not quite large enough necessarily to have their own specific single family office.
Yeah,
they can benefit from multi-family office service.
I think that's right. I think that's bang on, Gus. And I don't have the figures to hand, but the cost of setting up and the administration and the time burden of a single family office, and there'll be, I'm sure, people listening to this podcast who have done it extremely successfully, and for a number of individuals, clearly it makes enormous sense. But for most, and I would even say, anyone will probably have a different opinion on this, but even up to large numbers, 500 million, 700 million, I think it can make sense to mutualize the costs of an SFO by, and probably if I can add a fourth to that sort of trifecta of client demographic, it's single family offices where they don't want to take on their own CIO, they don't want to kind of internalize or provide in-house that kind of public market, and that is what we do really, Lucy, to your question. It's public market investing, direct stocks and bonds, very transparent, very high conviction, and hopefully lower cost, given you're not building in layers of different fund fees. But where those single family offices say, I really like what Ptarmigan are doing, this is exactly the approach that mirrors our mentality and philosophy, then we are starting to see more inquiries where they've asked us to come and pitch alongside far more established players, because as I say, it's a approach to managing wealth, but also managing the firm, which reflects their own, and they don't, quite understandably, want to get away from their own bailiwick of whatever that might be, real estate, crypto, their own commercial interests, and I think that is an area in which the firm will grow over the next couple of years.
So how do you go about, or how do you intend to grow and acquire new clients over the next year, or how have you done that historically?
Historically, we've been very fortunate in that the 3 or 4 clients that came with me from JPMorgan to Credit Suisse have been extremely loyal and placed their trust in us, sort of growing the firm to their benefit. So we haven't, all of those 4 clients that came with us are still with us. So, word of mouth has been quite powerful. I mean, we don't, one of the things that I was dreadful at as a banker was kind of cold calling and sort of marketing approaches down blind alleyways. There were lots of people who are very, very good at it, and I massively admire them, but it wasn't me.
It's a tough gig.
It's a very tough gig, and but that is the world of sales, I guess, at any given level. But for us, our old client bases, word of mouth referrals from our existing clients today. We have a sort of nascent board of strategic advisors, somewhere between sort of 6 and 8, 2 of whom are NEDs, but the other 6 are just, they like what we're doing, they're keen to support, and they've, helped sort of open up their networks to us, and that's been, very encouraging. And then the 4th, which is, far more kind of, standard and vanilla, is, the lawyers and the accountants and the tax advisors who've been kind enough to both work with our clients, but then also see, maybe Ptarmigan is a change option for people who are looking to, they've either created new wealth or looking to change advisors. And, we are, I think, slightly different to, a very large bank or an incumbent wealth manager. And actually out with those two sort of vectors, there's not an enormous amount of choice if you're coming to the market fairly sort of open-minded, but also uninformed about what providers are out there and what those different organizations can do for you.
Well, so you spoke a bit there about, I guess, kind of the services you've got and the types of clients coming in and their size. When most of these people are coming with an existing portfolio, they're either managing it themselves or they're bringing it over from somewhere else. Are you taking that wholesale if they've got, say, direct investments or a portfolio of properties? Are you taking on those as well? I mean, and are you presenting direct investments or external funds to these guys as well? What does that look like?
No, great question, Gus. I mean, the reality is probably our wallet share, if I can use that dreadful term, of clients' liquid net wealth is fairly high. Probably somewhere between 50 all the way up to maybe 80-90%. Simply because if you think our typical client is somewhere between 8 to 10 million of assets under management with us, and the sort of client who I think fits best for a Ptarmigan is somewhere between 5 million and a couple of 100 million in terms of investable assets. What we're doing is, and I think this is the joy of being small, is you can have the flexibility where you can still run a discretionary portfolio on behalf of a client, but you can assimilate so many of the existing assets if that still makes sense for that client to hold them. Yep. You don't go, oh, well, we don't cover, I don't know, BlackRock European Continental, so you're going to have to sell it. We will take a look at these holdings for you, for the client. Quite a few may be sitting at unrealized large capital gains, so why realize them for the sake of it? And where they don't make sense, then we can sort of sell, harvest, fold them in to what we're doing. To your point about sort of real estate and privates, Gus, that is definitely outside of our kind of bailiwick of expertise, but we can incorporate that into our reporting software. And, again, where people go, actually, Will, do you know an expert in, I don't know, Mediterranean commercial real estate? We will start to sort of bring and leverage our network to best effect. And I think that is what I love so much about, being part of Ptarmigan and building Ptarmigan to suit our client requirements, is you can pivot, you can tilt, you can flex the business model and take it in different directions to the extent, obviously not to the point that you're trying to be all things to all men and women. And we were very, very keen at the outset to ensure that what we were doing was transparent, it was simple, and it was predicated on being very, very good at liquid public market portfolio management. Yep. And then as we grow relative to client demand, then we can start to look to bolt on different expertises. But to be honest, and you and I have talked about this, Gus, like, why reinvent the wheel? The reason why, people like organizations like AYU are so invaluable is because you are getting in the room people with complementary skill sets and mentalities, philosophies, with shared principles and values, where that any given member of AU coming in is going to be able to do a superb job, but where, you would never in a month of Sundays be able to develop the expertise that they have. And I don't mean to sort of speak out of turn, but you just can't do that as a banker. I have an enormous amount of respect for my the previous organizations that I represented, but you had a set toolkit, and now, you are genuinely the definition of open architecture in terms of what it is that your clients are asking you to do and the license that you have to fulfill those requirements.
On that basis, and putting yourselves out there as an MFO, do you get the traditional incoming flood of requests for pitches for any number of funds and direct deals, and how do you deal with that?
It does. So it's interesting. It's very interesting. When I first left Credit Suisse, I expected the secret sauce of the boutique to be exactly that, to be the concierge, the gatekeeper to the vast amount of deal flow which revolves around half a mile from within where we're sitting today. The reality was that most people, and I say most people, I'm talking about the people that we were talking to, it was actually a far more, kind of straightforward, if I can put it that way, need that was not being met. And that was, as I said, feeling disenfranchised, feeling disillusioned, feeling not well covered by, perhaps the organizations that they've been with for, a period of time. The direct piece, or rather, and forgive me if I'm misinterpreting the question, the funds, the co-investments, the alternatives piece as a whole is something that, we absolutely intend to grow into, particularly when you're dealing with the upper end. I talk about 5 to 200, but we're talking to, a few people who are multiples of that. And then you have to be, more than conversant with the opportunity set that is arising across that spectrum. And again, Douglas Barnett, our head of investment management, and I are just sort of gently building the shelf of trusted partners, trusted funds, people that are doing things a bit different. Because anybody, with all due respect to what's going on behind us, Blackstone, we're not adding any value to somebody, coming to us and saying, well, what do you think? And I'm suggesting, BREP, and as reputable and successful an organization as that firm is, what I really like is coming to them and saying, look, these guys are raising 10 million in kind of whatever, European mid-market or UK sort of micro or Series A, whatever it is, and it's just a bit different. That's not to say we won't do the kind of more mainstream private credit, private equity kind of conversations. We will, but as I said again, we would never condescend to say that we know best in terms of allocation. We just don't. So, as client demand and hopefully the business grows, then, I can see us doing more and more in that space with experts in their field where, and again, with a small number of clients, what's right for one won't be right for the other. And again, I love that ability to just tailor things, not to the detriment of the firm in terms of, you're trying to do 1,000,001 different things for every client. But you can't deny, and there's a reason why, the endowments, the large-scale organizations have private assets as half, 60, 70%. And particularly when we start talking about, multi-generational, we're opening Bear Trust at the moment for, children of clients who are weeks old. Nothing would give me greater pleasure than, being able to meet that boy or girl when they're 18 and say, look, we've been doing this for you since you were, a glint in the, well, I won't say, but, it's, And then you need the private asset piece, right? Yes. The illiquidity premium, whatever it is. My CIO, Charlie Jones, would say that there is a lot of hype around the private market piece. And for us to just focus on, well-priced, good value entry point compounders in the public market, there's a lot to be said for that. But, where, AYU have been so helpful to us is just opening up the network in, the emergent themes and the dominant factors that are going to be, the superscalers and the behemoths of the future, but are still not available to buy on public exchanges. So we know that's something we've got to go to and want to go to. It's just, baby steps for the time being.
Yeah. Definitely. Well, with that in mind, how are you navigating the alts market? So hedge funds, private equity, VC?
There are a lot of people on here who are going to slightly cringe at my next comment. We're not, Lucy. We're not. We are solely focused on... So our starting point, Lucy, if you come to me today with 10 million quid and say, build me a portfolio, it will be single line stocks, single line bonds, gold, and to the extent that people want it, an overlay of hedging if people want it, right? Okay. Or FX hedging. So that's our starting point. And again, we are not going to change that mentality simply because, and forgive me again, Gus, I know your audience is particularly focused on the alternative side, but I think certainly in the private client industry, it's become overly complicated. People have got over their skis worrying about the newest kind of market neutral arbitrage strategy, and I know I'm mixing my terms here, but there is often an exhalation from clients or prospects when we say, this is what we do, right? You are going to know exactly what you own and why you own it. We are not going to worry too much out with the correlation of the single stocks and bonds about, what is going to happen and how we overlay it. And people really do respond to that. That isn't to say there aren't some magnificent kind of offerings in the alternative space. Of course there are, and I realize even saying that how absurd that sounds. But we took the decision as a business just to focus on, the sort of very simple, the very clear, and the very low cost, frankly, because, a lot of people have talked for years, certainly since the crisis, about active versus passive. We are very much an active manager, but we believe that being an active manager using active managers is a silly thing to do, right? Clients are overpaying. So you either do it through passive or you do it through single stocks. And so that is our approach. And when hopefully we're sitting around this table in 2 years' time, perhaps things have changed and perhaps things have moved on, because of course there is a space for alternatives in private client portfolios. It's just early on we want to focus on what we know.
So that's the question that comes up there is there, I'm assuming here at the client levels you're at, there's not a big push, there's not a big demand for them for asking for navigation help within the alt space?
A lot of clients have alternative exposure already, and the demand, such as it is, has been to help in the in the administration, the capital calls. Where's the mark to market? What are the IR documents saying? And pulling that all together, and again, we are certainly not the first to be doing that, is of great benefit and utility to our client base. To your point, Gus, though, it's from an entrepreneur's side, quite a lot of the people we look after, they've still got a hell of a lot of skin in their game in their second, third, fourth, fifth, whatever it is, business. So they've got a huge amount of private market exposure just by definition in the context of what they do. So they're not coming to us for that. And I think there is merit from a marketing perspective of people coming to Ptarmigan, and I mentioned the example of the single family office kind of looking to outsource some of the the equity piece of the pie to us. They know that that is our single focus, and for the time being our only focus. And that lack of distraction for us is, you guys know yourself, having built up this business, Charlie wears the CIO hat, I wear the CEO hat, but the reality is you wear about, it's like a tea party, you wear about 15 hats. Yeah. And so it's just understanding what you need to do in order to be able to properly cater for your clients without overstretching yourself, and I come back to it, not trying to be the sort of Swiss Army knife, not trying to be the sort of peripatetic all things to all men and women. So watch this space, but for the time being, the focus is on the liquid.
I know there's not like a one shoe fits all, but what would you say is the most sort of common or most sought after service from your clients that you guys find?
So service
or need?
Yeah, so need, I think, that is a really interesting one, and I we've spoken to a few people on the marketing side, a few people sort of the maybe sort of back end of their careers, and everybody has their own opinion, right? Everybody has a view. If I can answer it another way, I think I include myself in this, but the industry as a whole loves. It's not about self-justification. It's just people talk too much, right? Rather than getting the client talking. And I try and spend 10 minutes out of every hour talking, max. And so you tell me, right, what it is that you need. And I think, without being overly, what's the word? I don't want to sound too grandiose, but I think trust as a commodity in finance is in short supply. Right, because people feel sold the whole time. Yes. It's very easy to sort of open the third page of the Spectator or the Economist, and yet another wealth manager is promising to be your long-term partner, promising to be your, the trustee of your assets. In my humble opinion, you have to be, you've got to eat your own cooking in order to be able to really deliver upon that. And again, that means the multifamily office, the small boutique, the independent, is the only truly aligned business model that allows you to walk the walk and not just talk the talk. And I think, apologies if that sounds a little crass, but I think, when people look at us or look at, a lot of our peers, and if I can go off on a tangent, one of the things that I particularly have been so encouraged about since leaving the large institutional world is actually the mentality of other boutiques like us is extremely collegiate. People want to share ideas. People know that, they're, again, a bit like I was saying, they have skill sets that are particular to them. I'll name check a couple. Hundle, for example, deals with a type of client for whom we would just never be able to properly cater. There's a large alternatives offering there. There is a significant corporate finance angle, and we happily send people to speak to, your Hundles, your Lincolns, your Capricorns of the world, because we want those individuals to get the best experience, and we know that we won't always be the right fit for everybody. And I think having that leeway, that liberty to be able to say, go and speak to Ash or Lucy or Gus, they would be better placed to help you, is incredibly refreshing without having the, it's not the sword of Damocles, but the pressure to always be generating, new assets under management. And so I know I've gone quite off beam with your
You've
question.
actually answered my next question.
What was it?
Lucy was saying about need, and I think what people need is they need to know that Will and Charlie and Doug and Ed are still going to be on the end of the phone in 1 year, 2 year, 3 years' time. And performance is a part of that, service is a part of that, but it's just that partnership mentality, which again, sounds like every other organisation under the sun in terms of trying to position themselves for, new business or winning new clients. But, that runs through our DNA like a stick of rock. And as the CEO, that culture will always be embedded in Ptarmigan as long as, I'm part of the organisation.
So does that mean there is a kind of, I guess, a network with a network of private offices like yourselves where you'll share things and then maybe go to the slightly larger Capricorns and what?
Definitely. And I am always, having been sort of, part of Ptarmigan for a relatively, short period of time, looking out for others that, and probably like all of us, the Excel spreadsheet, and I'm extremely antiquated, probably use pen and paper as much as I use Excel. Just that kind of Rolodex of, right, who to go to for X, Y, and Z. And that is, because, and you come back to that point, Lucy, about MFOs, that is the joy of being, the sort of center, the fulcrum of your client requirements. Because it allows you, gives you license to touch the whole spectrum of life, frankly, from the pleasure to the professional, to the intergenerational, and everything in between. The touch on that last point that you mentioned there, Gus, just in terms of building the network. Yeah, so, I name-checked a couple there, but, I can think of 5, 6, 7, 8 who would be, first in terms of if there was a specific client with, a major US nexus or a very, very complicated private asset portfolio or wanted to do much more on commercial real estate, then, I'd be the first to be calling them up saying, look, we've spoken to X individual, he or she is not quite right for us, but we'd love you to, would you mind me making the connection? And clearly, invariably, they say, oh, I'd be delighted. And I just couldn't imagine ringing Goldman Sachs saying, guys, somebody's come to see me, because you wouldn't do it, right? Yeah. And you'd probably be let go.
Well, that was the second part of the question. Are there still channels of communication open with private banks?
Oh, definitely. I mean, I have huge numbers of friends in from the small all the way through to the kind of behemoth, and they are bloody good at what they do. And where people need bank specific capability, and I know my old boss would be sort of rolling his eyes looking at me now, but the reality is those banks are as large and as successful they are for a reason. So it's always horses for courses. Some people want to bank with the banks I used to be part of. Some people want to work with a small organization, and it's just being frankly humble enough and open-minded enough to say what's right for you, tell me what it is that you need, and then maybe we can help point you in the right direction. And that's simply it. And I don't mean to make us sound like a sort of charity or a sort of utopian altruistic organization, but ultimately I do believe in what goes around comes around, and if you act in the best interest of your stakeholders, i.e. your clients, then that will lead to the better outcomes for everybody in the end.
Lots of family offices out there, especially multi-family offices, will offer non-investment services too. Looking after concierge, lifestyle type stuff. It doesn't sound like that's an offering you have on the deck right now. Yeah. How do you answer that question when a client says that? Do you have partnerships with service groups like that?
The honest answer is we don't, Gus, yet. We are looking at it.
Is it a question you get asked?
Not overly,
okay.
And maybe that's a function of sort of self-reinforcing vis-a-vis the types of people that we're talking to, and how we position ourselves, maybe in our the marketing decks that we send, or the reason why they've been referred to us in the first place. It's we used to share an office in Berkeley Square with a single family office who most of their focus was really on concierge services for the principal. So there was a bit of exposure there, and it was interesting to see. But I think the short answer really, Gus, is we would probably refer them on, and I'd probably give you a ring and say, look, who would be the right person for this request, this inquiry, or this kind of project requirement.
So the notion of like trust and integrity, I feel like has weaved through this whole interview.
Yeah.
Definitely from the answers that you've given us, and I just want to I want to get an understanding, or maybe it'd be interesting for our listeners to hear, I guess, your summarization around how you establish that with families and how you maintain that. I mean, as I said, you've touched on this throughout the interview, but if you can piece together Will's playbook of how to...
Yeah, there's so much obfuscation with the term family office and it being misused, which we're trying to solve at the moment with our new program. So it's really, and we're trying to build that kind of with the advice of family office members, basically. So understanding that from your perspective, so valuable.
So I think this is really the nub of what it's all about, right? And, again, without sounding sort of trite, you can't, trust is not something that just appears overnight. I think it can be enabled by the organization that you represent. I can think of, myriad high quality people that I've met throughout my career, but their first responsibility was to the firm, and our first responsibility is to the client. And it comes back to what I was saying a little bit about eating your own cooking in terms of, taking not just financial, but also career risk in terms of putting your hand or your head above the parapet and saying, I think we can just do this a little bit better by building something that has got our fingerprints all over it, right? So I think that's the first thing to say is that the trust that I think our clients have in us is to an extent enabled by the organizational framework. Secondly, we are, as I say, we're 4 people. We may or may not, hire 1 or 2 people more this year, and you see it everywhere. The whole kind of adage of sort of hiring slowly and hiring as slowly as you possibly can. It was always imperative to Charlie, Doug, and I that we got people in that really bought into that philosophy, even to personal detriment, or going silly example, going without a salary for a couple of years because you believe in it and you think that you can get there, and you think that what you're going to build is of a magnitude or even a degree better than maybe what other clients are getting for the time being. If you ask me for the elevator pitch about Ptarmigan, it's founded around a trifecta of service, flexibility, and alignment. The alignment piece is, I think, inherent in what I was just saying about the model. I think the way we invest in terms of very direct, very transparently, you will always speak to the ultimate decision maker as a client. So there was no hiding behind layers of investment committee or somebody else said we should go long Europe and it didn't work out, so it's not my fault, blah, blah, blah. We didn't want that. We wanted to have our feet held to the fire, every investment decision, good or bad, that we made. And then, thirdly, most of our clients are shareholders in Ptarmigan. We have a rebate mechanism that once the firm reaches a certain operating margin, then a proportion of that retained income, that net income, will be rebated to clients against their following year's fees. Do I think that makes a meaningful difference for our clients in terms of their bottom line? No, but it's a very, very strong flag line in the sand for us to say that as this firm grows and hopefully as it succeeds, then you, out with hopefully good investment performance, will, your total expense ratio will come down and you will be sharing directly in, I hope, the efficient operating of this firm. But sort of in summary, Lucy, like you can't. It was the same when I remember at Sandhurst, I was trying to, sort of glean from grizzled majors and colonels about how to sort of inspire, your soldiers and sort of garner trust. It just doesn't come overnight. And as I said, I'm extremely pleased, flattered that, we have had the same and growing client base since day one. Not one client has left because of the change in structure or new people coming in. And I think, to the extent that we can take some credit, that reflects a absolutely kind of heart on one sleeve mentality to do whatever it is. And, from the really basic level, that's, being on the laptop at 10 p.m. or at the weekend or answerable to clients on a Saturday over Christmas. Again, a lot of people in our industry do that, but it's a small thing where if it's your business and you truly feel partner to your clients, then nothing's too much trouble. And, I think if clients start to see that behavior day in, day out, week, month, year on year, then, I hope our clients feel extremely well looked after, but also that element of, I know I'm in safe hands, starts to really sort of take root. And I think, to the extent that we've had a reasonable number of referrals from our clients, it's not because, we're, smashing the lights out with, 10, 20% returns above the benchmark, it's because of that philosophy and that mindset.
I think that you can definitely, I mean, it's quite clear to everyone that you're very passionate about what you do. No, it's great.
Don't apologise.
It's great. And I'm sure people who are listening can hear that even in the voice and the way you explain everything. I guess to that point, what is the most rewarding part of the job for you?
That's a great question. Every client's different. Every single day presents a different challenge. I mean, I remember when again, forgive me for sort of harping back to it, but when I left the army and I landed at JPMorgan Private Bank, I realized that I kind of hit the jackpot because the kind of kaleidoscope of markets was always changing. The geopolitical and the human input to what markets were doing was always interesting, always varied, always different. And then allying that with the EQ quotient, the EQ element of looking after private clients, where, you know, this is not for today, but you know, there are various kind of keyboard warriors on LinkedIn, as an example, the whole time talking about suitability in the private wealth landscape and how just it needs updating. And I don't have the answers to this, but the reason I bring it up is, you know, these forms ask you to fill out how would you feel if the market fell by 5, 10, 15%. The reality is when you're sitting with a flat white in Mayfair, it's an extremely different environment to looking at your portfolio in March 2020, March 2020, when the market's in free fall. And for us, for me, that level or that responsibility, I absolutely relish that. And I love being, you know, Charlie, Doug, and Ed are the same. You know, the ports of call, and it's that hand on the tiller, and it's that privilege, really. And I'm talking about the investment piece specifically here. But for me, if I'm going to answer your question in a much shorter version, Lucy, it's the individual challenge posed by each client throughout a range of market conditions over multiple years, hopefully, that, you know, keeps me kind of sparking, keeps me fresh, and keeps me motivated, and I love that, and I don't use the word lightly. It is a privilege, and, you know, to be able to build our own firm on behalf of our clients, I feel very fortunate.
Definitely.
Love that. What's zooming out a little bit to the year coming? Obviously, lots of changes coming. Notably, obviously, US change of administration. Yeah. What are you looking forward to? What scares you? What's exciting? I think it's a very boring answer. What scares me is, like, where do we run out of road with, you know, kind of G7, G4 Western deficits? This came up a lot at the AYU summit in December. It was fascinating listening to members of this network talking about, you know, the threat to fiat currency and why Bitcoin, why gold have a major place in you know, people who are far more qualified than me to talk about it, but I think that is a worry, and we're seeing it today, right? You know, Rachel Reeves, you know, UK borrowing costs. Where does that end? And I think we've got, I hesitate to say complacent, but, you know, the market certainly since, you know, kind of the bottom, you know, spring 09. Yes, there've been some lumps and bumps along the way, but it's been kind of up and to the right, particularly when you talk about the US stock market. Do I think we're complacent now in terms of always thinking that, you know, the Fed will be, you know, the put of last resort, and, you know, asset markets always go up, and, you know, Trump will be back and he'll light a fire under, you know, the AI sector, or, you know, I think we are. And so, you know, being able to sort of navigate that, as I say, ever-changing kind of kaleidoscope picture is what I love about what I do. But to your point about what am I worried about, I'm definitely worried about, you know, a situation where interest rates start to really, you know, spiral out of control, and people talk about bond vigilantes. But, you know, we, and I talk about, you know, humbly in my very short kind of financial career, have never seen a world when the 10-year has been meaningfully above 5%. And now, you know, the US 10-year is on the kind of cusp of breaking through. The UK 10-year may, whilst we're sitting here, have gone through that. I think that has a knock-on effect to all sorts of asset classes, which is just not being priced. And we've had 2 years of plus 20% in the S&P, so that worries me. You know, clearly,
I like to think of myself as a glass half full person, but I look around the UK and I don't get, the buzz of optimism that I sort of see in other parts of the world. And, again, lots of people have a view on why that is, and maybe we're a little bit insulated in, Green Park, Mayfair, Piccadilly. It is obviously a microcosm relative to the broader country, but it bothers me that, people like Elon Musk that feel like they've been getting involved in our politics and frankly, that our politicians are making so many, and I don't just include this administration, I go back into the last government. It feels like that kind of spirit of pioneering kind of can do is sputtering a little bit, and I'd love to sort of think about, and there are various initiatives that play around bringing community spirit back and bringing the business community together, but we're not getting it from Westminster, so that bothers me. But at the micro level, we'll just continue to do what we're doing. And, to the extent that we are, fortunate enough to be included in networks like yours, like AYU, meeting great people who are ambitious, who are positive, who want to do good, who want to be involved in, charitable or kind of adventurous initiatives, those are the types of people that we want to surround ourselves with. And I think to me, that insulates us from, the sort of macro pessimism or the worries about, what's going to happen to the European bloc, what's going on in China. There's always a reason to worry, but there's always a reason to, look the other way as well.
Nice. Thank you. A really fantastic answer. Covered so much. I've got another million questions, but unfortunately for today we're out of time. I think we'll have to have you back on with your co-founders.
Well, we'd be delighted, Gus.
Wow, what a great start to the podcast. That guy is impressive, to say the least. I do love an ex-military man in finance. They are organised.
We see a lot of them these days.
Yeah, no, it's common. It's a really common career path to go from that, because the discipline and process you get from being in military situations is second to none, and obviously British military, very.
Can't get better than that.
So what's next? What's your next week look like? We've got a busy time coming up for obviously Miami and stuff. What are you working on, Liz?
So I was actually looking at my calendar yesterday. Tomorrow, in 2 weeks, I'll be flying out to Miami to basically be heading up Miami Hedge Fund Week from the AYU side of things. As we mentioned in the intro, we have the Family Office Summit, the 2 AYU Yacht Days, and some other private dining events going on from our side. I'm super, super excited and looking forward to getting out there. The only thing between now and then is getting all my meetings done, getting people onboarded, getting guests attending.
As ever, there's still people coming in right up to the moment.
Exactly how it is. So we're just trying to look after our sponsors. We're trying to make sure our members are happy, and that we've just got a really, really great calibre of people to network and enjoy our time in Miami. What about you?
Very much the same thing. Just trying to make sure everything's well organised for everyone in front of Miami. There are so many people going to be in town that we are still getting requests for events and meetings and everything going on basically. So it's staying in touch with that and making sure that everyone who's coming is we're making the right meetings and connections basically. 100 family offices there for the Family Office Summit on the 27th. Very, very small amount of GPs. The idea is that the only GPs there will be the ones pitching, and the ratio of LPs being family offices to GPs is the best possible. So our GPs get to have a set of meetings across the day and then network, and some really great panelists and speakers and content on that day too. And then we're rolling in, of course, to the AU Yacht returning for its 4th year.
I was trying to figure this out the other day. I think it is
our
fourth year.
Yeah, I think 21 we started.
So what are you most excited for in terms of Miami?
We go there a lot now. We were there last month, and it was that was an exciting trip.
Yes.
So we're getting to know it more and more. That's really nice to be able to get into a community there. We just added Kian and Laura as our ambassadors there, who you'll meet in the future. We'll get them on the podcast too. They're going to be hosting stuff when we're not even in town. So that's, I think, probably the bit I'm really excited about, is expanding the network there more and more, as well as New York, Geneva, Zurich, and all that. Dubai we're adding this year too, so that's probably the bit I'm most pumped for.
Definitely. I mean, we've literally been in Miami in December, we're going in January, and we're back again in February.
You're February.
I'll be back in February.
I'm having a kid in February, so
okay, yeah, I'll let you off. I'll let you off.
You let me off that.
I'll go tear up Miami.
He can come next time. Number 1 came on the trip, didn't he?
Yeah.
Yeah, okay, so we better stop talking and get on with some work, because we've got some stuff to organise. Oh, and don't forget, ski trip.
Ski trip.
AU Ski, March 20th, Courmayeur, Italy. We've probably got about 20% of the rooms left. Some good, very exciting, interesting funds, family offices, and service providers, connectors,
Definitely.
everyone coming on the trip. So much fun, gets big every year.
It does.
Can't wait for that.
I mean, it's a great way to get investment, right? Ski next to your future.
Well, yeah,
family
you've got them
office
trapped
invest-
on a ski lift, so it's a great place to pitch.
Yeah, there you go.
Fantastic. Okay, we'll see you next week.
Bye.